welcome for those who are on the call, for those who are will be watching this recording. This is our Traders Lab call. This Traders Lab call is for the members in our group where we're going to be going over breaking down trades that we've taken either last week or upcoming or current. We're going to be looking at the markets live tonight. And the whole idea behind this Traders Lab, it's pretty much like over the shoulder watching someone trade, right? That's how Reed and I learned. I love visual. I love to just see how other people see the charts and what they're doing, and you know what I mean. And I feel like that's a good dynamic of learning. There's books, there's podcasts, there's courses, but when it comes to live demonstrations like this, I believe it's very effective. And so, which is why we put together this Traders Lab. We dive in deep. We touch base on it with our weekly watch list just to put these trades on our radar. So actually, we're going to be taking apart some of the trades that we took last week, winners and losers, okay? Because I don't win 100%. Reed, do you win 100% all the time?
That's a negative. No way. I lose
let's
more actually, to be
let's
real.
you lose more, but you still profitable, huh?
Yep.
Boom. Okay. So yeah, with that being said, let me go jump into my share screen. All right. So on our weekly watch list, we were talking about we put down the MNQ, which is a micro Nasdaq market I was looking at. Let me just clear these drawings here. So I put that out as a radar, a market to look at on the trade. So this is a micro Nasdaq market. So we sent that out on the 17th, I believe, that email. And so the week before that, this market was making a short run, a bear run here, but we got a large candle wick right here that knocked out a lot of people. So I sat and waited. Let me see. So I drew a range that this market was showing. So I take a previous high and a previous low, and I just saw that okay, it's trading in this market in this range. There's a price action. I waited for the market was starting to make a bull run up here, and these let me just pull it up right here. Okay, so we started to make a bull run, and I did not get into this position because we were waiting. Like I was saying, we were trading in this range here. Where did it go? We're approaching this level of 12,236. Okay, yeah, I can make it bigger. So let me know if you're able to see my screen. Okay. So market was going up, but we're approaching this level of 12,240, and I was aware of it. Okay, and this is a shorter term trade, swing trade. I was looking at 1 hour chart. Price didn't touch the 240 level, but it did somewhat react back down to what I was anticipating to reach the bottom range of 11,390. And so when it had a strong close here, I went to go short. I took a short position, 11,980. And I was anticipating this swing to continue on. But, of course, and then I set my stop using my ATR as a guide. When I say ATR, that's average true range. So what the ATR indicator does, it's just based off of price. And you can see it at the bottom of my screen here, this yellow line. And what it does, it takes the average amount of pips or ticks, and that the market has been moving in the past 20. However, you can set the change of parameters, but I think I put 20. The past 20 candles, what's my average movement? And so I used that as a base for my initial stop loss. And of course, price continued down. I was in paper profits here at this bar. And then price started to pull back. I left my stop. My initial stop was probably around 12,100. And so price continued on, of course, and then it just took me out. So what I did was just take a loss on this trade, because price just did not continue on. Um, but you know, that's the name of the game. I took my loss. I limited my loss to my strategy, and it was okay. I'm like, okay, now I can go on to the next trade, right? And so if we were just to continue this market, let me go, where is it? So I got stopped out and it just continued higher. And then I know last week, I took a position in the, let me get out of this screen. So that was a loser for last week, but a winner for last week as well, I wanted to go and share, was the micro S&P to MES. So after my stop out, you're going to see similar price action between these two markets. So what I did see, let me zoom back out again to a 4 hour. Okay, so what I did see with this market, same thing, right? I start out, I zoom out. So right now I'm in a 4 hour chart. We can do this with a daily. I like to start with a daily. And so I go from a previous high here. I just draw my range, as you would say, or previous high 39.14, previous low. I like to go to the body of the candle rather than the tick or the wick. So we're in this bigger range. We have an intermediate low here as well. So we're in this range of 39.14 and 37.76, which is pretty big range, you know, almost 200 points. And what I saw with this particular market, we could zoom back in. So I drew my levels. And what I saw with this market, where'd it go? Okay. I saw a breakout of my range. And so I entered a long position at 39.19. Let me just draw entry here. Enter long because we had a solid close above the breakout, above the previous range. And then I was anticipating the market to come and pull back because a previous resistance becomes the next support. It's a rule of thumb. You got to take it with a grain of salt. You know, it does not always happen. Sometimes it just takes off when it wants to. But in this case, price, when did I enter? Tuesday on the 19th. Enter long, holding the position. Price came back down. My stop was down here, 39.12. So I was able to give the breathing room for the market. You know, when we say give breathing room because of the moves like this, it'll pull back. Okay, well, not once it goes up, it does not just continue to go up. Then we had a strong move, made a new recent high. Then we pulled back again. Then it consolidated for a little bit. I had this long wick here, and you know, I did not trail my stop as close. I did still keep it out of the range here, out of my Keltner bands. And so by this time I was no matter what would happen, my stop would be right above my initial entry, 39.22. And if you have any questions, let me know. You can type it in the chat. But so I was able to stay out of this wick right here and let price continue on. And so in paper profits, I was going This was almost a 80-point move right here. 80 points times 4, 320 ticks, right? And so I was just letting it roll, let that market roll, and then when I all said and done, I think I got out at 39.60. Let me see. 39.60. We had a strong close here on Friday, I believe. 22nd. Yep, the 22nd. So that was a capture. I was able to capture this about 40 points.
I have a
Yeah.
couple questions, Glenn.
Uh-huh.
Was this under your a prop firm account? So did you have to close the trade on Friday, or you could have let it run over the weekend?
So this was on the Top Step swing account, which swing accounts are able to hold over the weekend. The reason why I did close this was because I got a exit signal, you know, and so it just lined up. So happened to line up with Friday, and that's something. Yes, that's a good point because that's something to bring consider when you're trading with these prop firms because some of the prop firms don't allow you to hold over the weekend. And you just got to go abide by the rules. And with this particular trade, I closed it out because it hit my stop, my trailing stop, and that was my time to exit the trade according to my strategy. And so, if you go back to the market, let me go back to my screen share.
It's a nice move, though, man. Got to
Yeah,
compliment
thanks.
you on that one. That was a nice. Did you scale into that position, scale out of that position, or like took some profits off after it reached a certain high, or you just kind of let the whole thing play out?
It was I think all I did because it was last week I was packing up, so I had one
Ah, right,
contract.
right.
I had one contract. I didn't scale in, so it's just one entry and one exit. Pretty simple. So what happened after the fact? We hit a recent low. Price tried to pump up again. It could not break a new high, and then it just continued on to either go sideways, but close a little bit lower. We are retesting this previous level. Um, like I was mentioning, it was a previous resistance. Now it's somewhat of a support, 39.14. So
Yeah, I
look
like
how
that.
that turned out, huh? That's something I just noticed. So we'll see. We'll see how price plays out. Right now, for me, it's still in a range. So let me draw another one. You know, for since what date is this? 19th this month. It's been within this range, 4,000 and so about 80-point range. So, like I said, going back into the market, you got to look at the market direction, or the market conditions currently. Tomorrow, yes, we do have some FOMC and Powell speaking, I think, so that's something to consider
Yep.
when we're going into. So we might expect higher volatility. So for me right now with this particular market, it's more so just sitting and waiting for what price is gonna do. I see two things or three things actually. It's gonna continue to stay in this range here that I drew. We're gonna have strong or plan B have strong momentum. Wait till we get a close back into the 4,000s, or wait till we close below 3,900. You know, keep it simple, guys. Keep it simple. So that's something on my radar. Three different outlooks for this particular market. I'll just be waiting for something. Hopefully, whatever happens, they bring in some volatility, and then we'll be there to take advantage of that. So,
One last question.
ah,
What would you have done differently, if anything, for this trade?
no, that's good trade. Good question. I wouldn't have done anything different. I would have if I saw had the same setup, the same price action, I would have done the same thing, man.
On the bar, July 20th at 4 a.m., it created a new high on the hour. Would you have entered a long position on that, or kind of just what you said, just kind of stay out, let my one contract run?
July 20th, you said?
Yeah,
Yeah,
on
I
the
saw that.
micro.
Yeah, so let's bring it
Like, why
back.
wouldn't you have taken that one? That's a good.
Let's bring it back. Let bring it back. Okay. Okay. So this bar, yeah?
Yep.
39
Yeah, that one.
73, yeah. So I mean that's a good option. So say we did add a position, okay? And then say both were in profits at this time. And say my trailing stop was still at 39.60. I would have took a 12-point loss on the second position and had my first position take a win. There's different ways to go at it, so you got to just take the difference between the two. I would have ended up with maybe less profit, overall, a net profit at the end. So there's different ways to go about it, you know. If I was trading multiple contracts and I had a few positions in, I would have maybe scaled out more so, um, when price is going up rather than letting it hit my full stop. So I would have scaled out on my first contract probably at 4,000. Okay. Peel
Okay,
that
okay.
position off and then move my trailing stop for the second position, um, at the 39.60 level. And that way I would have captured, let me see, 80 points instead of 40 points, and then still
Okay.
take the difference of that small loss. And
So that second position did fit your plan to enter? Like, it was okay to enter if you did?
it could, yeah, it could. That's how it would have played out if I had multiple positions. I would
Okay.
have played that, but like I said, yeah, I mean, if a good, now that you mention it, if I was to see it again, maybe I would have acted differently. But since I was busy with life, I
Yeah,
did
that's
not
kind of
take
good
that.
then. Kind of like played out in your favor almost. You kind of walked away with a little bit more profit. What about on the following day at 6 a.m.? It created another high.
This,
Is that too many positions that you would enter, or like
yeah, it's
how?
too much, too
Okay,
much,
okay.
too soon, too much too soon, for
Got
this
it, got it.
particular move. Now you got to
Is there
take
a
it.
time frame like you're like, okay, I need to wait at least a day before I enter another one, or
So
2 days,
with
or
when I'm adding more than one positions, of course I want to go look for higher time frames more so. Since I know with this 1 hour swing strategy, the moves will the cycle or time of the moves will be shorter than if I was trading bigger time frame. Okay, so like on the daily chart, I have more time, and then I have more play wiggle room for the markets, different type of risk parameters. So you're just gonna change your whole, outlook with a bigger chart. So yeah, with the daily chart, I would need more. I could be adding more time. I mean, more positions, but the move will just take a little bit longer than usual. If that answers your question, bro. Good
yeah,
stuff.
no, that's good, man. Good breakdown.
Good stuff. Good stuff.
Cool. I'll share mine then. I got
Yeah.
a Euro odd I was watching all week last week. I think the last couple weeks I've taken a couple of losses on it. Let me share my screen. Okay, so this was last week, this purple vertical bar. This is when we released the what is it called? Our watch list. And then I also entered this one because it's a short. So I actually took two losses over the span of since the 13th. So 2 weeks, two losses on Euro odd alone. Then it continued to play out. I didn't want to enter this position just because it was in this huge range here that you can see the circle on the 4 hour on the bottom left. This huge circle, or this huge range right here. I wanted to make sure of a confirmed break And actually, I think I actually might have gotten out here because I didn't get out for profit. That's for sure. So, oh no, actually, I remember it was here and it was a break even. That's what it was. So that was the entry, and then it was a break even. Move position here. As soon as it's pulling back, it's here. And I wish I could make it more clear. This is a note for myself and Glenn that we need to journal a lot better to show everyone like how this looks reflected on a journal. So we would put the entry, we put the stop loss, and it's basically proof that we actually did place this trade. Because you see, I'm just drawing it all over the place because I like clearing my charts every week. So anyway, I got taken out on a loss for this position here, the first position. It
Let's
created
talk.
a
Let's dive into that first one. You know.
yeah, let's dive in. So
Yeah.
this one we come across, if we look at the daily first, make it a little bigger here. Oh wait, I'll show this. So we're gonna sync to all layouts here, guys. Make it a little more clear for everyone.
Yeah. Remove the. Yeah.
Yeah, and just let me know if my mic goes a little haywire. Yeah.
Yeah.
Okay, so this first position, I like this 4 daily. This is the daily chart. 4 daily position here. I'm going to remove the volume. It's a little confusing on the daily. It broke out of this ascending channel. So for me, this was a pullback continuation play. So we are creating lower lows. Overall, we are in a bear market. Again, I want to just clear this out, just to kind of like make it a little more clean for you guys. So again, this ascending channel after a bear move, followed by a breakdown of this ascending channel. Then we go back into an ascending channel after a bear move. And to me, that's a continuation play. So we got a back-to-back bear continuation play here after an ascending channel pullback. So this pullback and then a breakdown really is like one of my go-to trading entries. So I like how just you see how it broke below the 200 EMA, the 50 EMA on the daily, strong bearish bars, strong bearish engulfing on July 7th. And at this point, I was really looking to follow this momentum downward. But if we know anything between euro and AUD and what's been happening lately with the euro specifically, it's just it went into a corrective period from the 8th all the way till I want to say the 20 this whole month. We'll just call it the whole month. So the 8th to the 22nd, 21st, that's when we finally saw movement. A lot of dojis here, a lot of low test reversals. The market's like, okay, we're going to go down, but we're not going to go down yet. That's pretty much, it's like fake outs essentially. But to avoid that, we go into lower time frames. And if we look at this 4 hour, I'm going to make this one bigger now. Whoops. This is the 4 hour. And then, okay, I'm sorry. I want to do one thing for you guys, make it even more clear. We're going to sync these ascending channel indicators here, or horizontal lines I want to show. So we got an ascending channel. So we're talking about this bear movement down, followed by this enormous ascending channel pullback. It's an ascending channel pullback because we were in a bear market overall. The 4 hour broke out of the descending channel. Again, both EMAs are broken, and not only are they broken, they're broken with momentum. So they have a strong momentum to the bear side, downside. So at this point on the 7th to 8th time frame, I'm looking at this trade, this position to continue short. So I just want to kind of draw this in here. So if I was actually gonna take this short, I just placed an entry order. This is what I'd be seeing real time. I see entry order, but it didn't trigger me in yet, which is leads to this second or this first entry here. So this first entry, I get triggered in and I get taken out for a loss.
12, so 13, when you say you got triggered in, you just whenever the price touch your limit order, right?
Entry order, yep. Or okay. Limit order, entry order. I call it an entry order because what an entry order is, I place it and I basically forget it and let the market take me in. I'm not entering as soon as I see it. The market will do its thing, take me in. Yeah. So this is the 4 hour here. I like the bearish momentum. We go to the 1 hour, and here is our first position here. I'm going to make it a little bigger. So this again, we got the yellow line, right? That's the ascending channel, broken below, and then we have just a consolidation. But this, it finally broke on the 12th. It broke below and it closed below the most recent lows, pulled back and then continued on. So I figured, hey, this is the movement. We had a lot of momentum the last few days. The last, remember, it was like 5 days, just to put it in reference, right?
Yeah, yeah.
This is what I was looking at. Okay, we had a lot of momentum here, a little bit of consolidation. I'm hoping for that continuation to move. Probability says so. But I got taken out. A few days later, I got taken out. And that was my first loss, you know. So it is what it is. And it wasn't a full position. I believe I gotta see, I got a journal. I gotta look at my charts to actually update my journal. But I did get taken out for a loss. It wasn't a full 1% loss, but it was a loss. Moving on, I get, let's see what else. Moving on, it's still consolidating. So the 4 hour all around here, it's still consolidating. You know, I figure a week is a good time. There's more bearish momentum. This bearish engulfing on the hour is really nice. Oh, sorry, I want to leave that there because this is the start of the new week. So the 17th was last week, right? So I like this position. Entry order here, no trigger, right? It just consolidates. This entry order led to this position. So right there, you know, that led to that position. The reason why I put it lower, because I wanted it to be below this area. I wanted it to make sure that it confirmed the break, which is why you see this entry here. So go. Got taken out again. So at this point, I'm like, okay, when is this thing gonna go? I know it's eventually gonna go, but a way that I've experienced the market, it could do this all the way down. It could go all the way down to the levels of my initial target is 1.43142. And the way that I got this target was because it's the bottom of a range. So these two white horizontal lines is the bigger range on the daily. And so that was my initial target right here. So I could label that as, where is it? Profit, SL profit. So stop loss profit. Excuse me. So that's my 1, 2, second position. And the third position, I get taken out for a break even because, and the reason why I was so tight on my stop loss for this third position is because of this entire movement. Look back at the 4 hour, look at that huge consolidating. It didn't last for just a couple of days. It lasted for, you know, we're going on the second week here, going on to the third week. So I wanted to keep it tight. I know that it's been wicky lately. So it spike down, spike up, spike down, spike up. That's kind of like the volatility that we're experiencing. So, but the EMAs are in play on all time frames. I like it. The bearish momentum is there. So I have the trend in my favor. I have the EMAs in my favor. I have the candles in my favor. Volume, when volume really spikes up in the bearish move, it's there. Volume spiked up a little bit during this time as well. Got triggered in, got taken out. So that's this position here. Followed by this position I just got in and taken out today. So I'm going to remove this just so you guys know how today's position went.
Yeah.
So I was telling Glenn over the weekend, I actually I back tested to see what I was how I could like refine my trading edge a little bit. And with this type of market on Euro Odd, I realized that the moves are happening early in the morning. It'll take me in and then it'll spike me out. So I looked at these three losses and I was like, what time are these things going? So usually the volume is peaking up at 4 a.m. They're peaking up at like early hours of Hawaii time, yeah. So like overnight, so between 2 and 4 o'clock, right there.
Yeah, like the New
So
York
we see
Open
that
and...
volume pop up, and then you know this one actually happened overnight, but the momentum on a reversal happened at 4 a.m., which is I woke up and got out of this one. I think maybe for a little loss, but anyway, I'll pull that up. I'll pull that journal up later and post it in the Mighty Networks. Followed by this one, you know, overnight got triggered in, and then we see volume at 4 a.m. right here again. So at that point, I know after these three losses, I realized, okay, if I hold this, I'm just going to get taken out for either a break even or a loss. So I'm going to just take my profits and be done. So I believe I put it, I didn't even take it that close, honestly. That's too perfect. I was actually, yeah, I was like on this pullback right here. I just got taken out. I mean, I closed my trade here for a profit. So it looked like this. And then I was waiting for a second break, like for a second entry similar to this, since the market's already moving. So it would be the 50 EMA. So I didn't get triggered in for this second position. But that's how this trade worked out. And these three didn't work out. So I got two major losses and then pretty much a just over break even loss. And that's to me, it was a win. I was following the strategy. I've been looking at Euro odd for a very long time, for the last month essentially. It was showing the nicest and cleanest move. Again, the big trigger for me was this ascending channel after the bear run. So it's essentially that ascending channel is a pullback,
Yeah.
and that's
Yeah.
how it fit my plan. I loved
There you
it.
go.
I still like this move. I'm looking for more entries. We'll see what happens overnight. We'll see what happens with this these announcements that's coming through too. So I will
Just
point out what
just the
else.
kind. Stay up at 2 a.m. Eh? Two.
Hey, that is a strategy. It could be if that's the time you trade it.
So I
One,
want to. Oh, continue on.
yeah, no, last pair I'm looking at now is Kiwi Cat. So this is like, oh, I drew this in as Glenn was analyzing his position. Again, we're seeing similar patterns, right? Overall bear trend on the daily, bottom right here where my cursor is. Then we got pullbacks and then continue on lower. We got a pullback and then it continued on lower. So we could be seeing the similar properties in this market where it's doing a pullback here. EMAs are there, EMAs on the 4 hour there. The volume is the thing that's keeping me away, is it's really low. With these strong or big engulfing candles, the volume is very low. So that's something I want in my favor is the volume, because we could enter in a low volatility and just get taken out. So I want the market to take me in just as it did with Euro odd. So something that I would look at to trade would be something like that, well below this ascending channel here, and then well below the most recent lows. So it'd be something similar to this, same thing, targeting the most recent range of that low. So something like this. But that's what I'm looking at right now. We'll see what happens as the night goes on.
As the market goes on.
So
Yeah, what I wanted to point out with your Euro odd position, when you're using formations or patterns on the charts, like you can see how it played out, but it's just you don't know when. You know what I
yeah,
mean? And so what you were doing was just sticking to all your criteria and then pulling the trigger when your criteria tells you to. And then yes, you just, like that's like the reality right there. It showed you. You hit the three small losses and then came out with a gain at the end. And so um, that's just something to point out and something to acknowledge when you're using these types
risk
of
manage you remind me, like, risk management is so important. We actually just
yeah.
released a podcast regarding like intro to risk management. If you guys didn't listen, take a listen. But um the three losses, my one win made up for those three losses.
There you
So I
go.
mean, that's the key point of what risk management is you could lose more than you win, but that one win should be like a 3-1. That's essentially what that is. It's a 3-1. But I'm just gonna, yeah, sorry, go on, Glenn. I'm trying to pull up the data for
Yeah.
it.
No, there you go. Right. So even though what Reed said, you got three losses, that one win took care of the previous losses.
There you go.
Um,
So
and when we were starting out, like those three losses would get to my head. I would have, uh, you know, threw in the towel and would have missed that next opportunity. So a little bit of persistence, a little bit of confidence in your system, knowing that your edge will play out eventually. That's key for that particular move or that particular market. Um, but yeah, keeping the risk, that's the key. He was able to keep the risk small enough where he was able to survive, stay trading the next day, live to trade, trade to, or what is it? Live to trade another day. You know the saying.
Live to trade another day.
Yeah. Don't
So I have
ever.
a on my this is essentially like my trading history. So on the 7th, I got a win for $80. On the 8th, I lost $58. So that's around a $20 win, or $12 win. 50, 60, 78, or yeah, $20 win. Anyway, not good with math on the fly. So third position, I got out at just under break even, which with a win. So it's $8 win, followed by a loss, which is the $18 loss, followed by today's win with a $94 win. So
Yeah.
that's essentially like, that's what we're talking about. Like keep the losses low, and then the winners let it kind of run if you can. But you want that winners to be bigger over
Yeah.
time.
Yeah. And it goes back to having a sound strategy, being able to follow your rules, being able to stay disciplined, not over risking, not over leveraging. In that string of losses, I could have myself. I would find myself going to tilt. I would be leveraging up my bets instead of keeping a correct risk management size. Because naturally will start to go revenge trading and start chasing after the previous losses. So the way that Reed executed, all you gotta do is just add zeros, and then you'll be on your way.
I'll be honest though, like I didn't feel good taking those losses,
Yeah,
like it sucked because you begin to question your edge. You begin to question your own mindset. Like, am I trading well? Am I like what am I doing wrong? But then you just gotta. That's why journaling is so important. Is you look back and you like realize that, oh, my edge does play out, and I know that it'll eventually work out, just not in my timing, but in the market's timing, and that's really hard to accept.
mm,
And the quicker you accept it, the easier your trading journey is going to be. The quicker you're going to be in profit for longer.
absolutely. Which is why we really dive into those three pillars. The strategy. What we've just shared with you guys is one of the a few of our strategies that we utilize. But what you don't see on the screen is what goes through our minds when it comes to the mindset, the psychology, and then the risk managing part. And those are all the three main things that we continuously preach and pour into share with you guys because it's super key and they all work together. We can you can have the most perfect entry, but it'll still be a losing trade. You could have bought Bitcoin at $10, but if you didn't know how much to risk, where to exit, and you're losing your mind during those big swings from 19K down to 10 to 5 or whatever, back up to 60. What are you gonna do, right? So with those things that we share, there's always things leading up to, there's reasons why, there's all these different factors that we incorporate when we make these decisions in the markets. And I will just want
Yeah,
to
one
go.
Oh yeah, I wanted to share. So we Hawaii Trading Academy. We're on Twitter, and like I'm mainly behind the Twitter handle. And one of the traders said, and we follow a lot of traders, like professional traders, and he said, some of my worst looking trades end up being the most profitable, and as Glenn said, the most perfect trade that lined up to my strategy ended up being a loser. And he said those are the psychological battles that we have to overcome and be like, why did that work out? Doesn't mean trade your plan or change your plan. It just means to trade your plan.
Trade your plan. That's
Yeah.
it. That's it. Yeah, let's open it up for questions. If you guys have
Yeah.
any questions of what we just went over tonight or anything that sparked your mind while we're talking our heads off, we can go on and on. But yeah, want to open up the floor if there's any thing that resonated, anything that you had needed clarification with.
So, on the charts where you have that red line going across, I don't know if you can put a chart up.
For
Me or
Reed
Glenn, or
or
I could pull up mine.
Okay.
Are you talking about this one?
No, oh, I think it's on Glenn's one.
Okay.
Okay.
Last chart
Yeah,
they
turn it
had.
in.
Let me pull it up. Let me oh, wrong
Sorry,
share.
my kid.
Where'd you go? Where'd you go? Hold on 1 second.
Use the
How come? Wait, let me sorry. It's hiding. There you are.
shut the door, please.
Pulling it up right now, sorry.
Okay, thank you.
Okay, red lines, yes. So those are
Yes.
just simple horizontal
How do
lines.
you, yeah. How do you justify where to put them?
Okay, so it goes back to chart analysis, really just identifying the markets. So let me just clear the drawings again. Okay, and I'll just clear. I'll start with a blank canvas. Yeah, so it might be easier for you guys. Okay, so right, all you see here is the price or candles, or I use bars if you've noticed. And when we go zoom in, say here, let me zoom in. So this particular green bar of and then I use what I like to use is the body, the close of the bar rather than the tick. So if you look at how the candles are formed, you have the wick at the bottom, right, where price was at one point in time. Then for this particular green one, we have the open and then the close, and it did peak a little bit above the close. But what I do is just of course, through time and experience, I zoom out, I look at the bigger time frames. So I start with the daily chart, right? Zoom in to the current market action. And then I go ahead and just grab my drawing tool. And then I use the close of the previous high of the chart. So 39.91, draw that there. And then I look for a previous low, 37.95. Okay? And so right there, that's just showing me levels of interest for the market. Just because you draw it doesn't mean that the market will abide by it. I've learned that,
Lines in the
But
sand.
these are visually aids for me to consider. Okay, it's a piece of the pie essentially. It's one ingredient for your recipe. So that's where these red bars come in, these red lines. It just gives me a visualization of where the market's at. It's like you got the markings on a football field or a basketball court, the lines there, where the boundary's at. Where's the 3-point line, and you can zoom in. I go by the rule of thumb that bigger time frame rules. So that's why I drew it on the daily, because those levels are somewhat more significant than if I was to go into a 5-minute chart. You see how much data there is on a 5-minute chart? Like
Oh,
where
wow.
I drew that line. Price was going haywire over here, well above it, and so it's like, okay, price the line is literally in the middle of all this price action. You just can consider this noise. This is the really microscopic movement of the markets. Yes, it's not, these horizontal lines aren't perfect, but it's a guide for me. But you could definitely use it. People call it support resistance. You could go ahead and do that. But definitely, in one of our trading courses, a trading approach, we just share something like that. Just go ahead, do the exercise, grab a chart, whatever. You can pull up Apple, oh, apply Apple. Let's go see. Oh, AAPL, right?
Apple APPL, right?
AAPL. Okay, so same
my
thing.
bad.
Apple. I'll just go ahead. Okay, previous high, previous low, mark it up, and then we got some sort of low here, low here, There, and then you just go on to the next Google, right? You
Mm.
can see Google, it's more of really a consolidating or sideways market. So you can see how it's well trading in this range. You know what I mean? And so that kind of gives you an idea what condition or what current state the market is in. You see how price at previously back in April, we were at a recent high of 143. Then we just came down, and so we call that markets trending down. Markets move, the move price is moving down. And then right now it's not necessarily moving up or down. It's really just staying within this range. So we call that a consolidating range or consolidating market, and therefore you have to adjust your sales and see how your approach is going to be during this consolidation market. If you choose to just stay out because there's no play, then that's great. Go ahead. You don't always have to do that. Same thing, Euro USD. You just got to put in the practice time, identify your charts, and just draw in your lines. Hope that helps.
Oh man, like so just a heads up. Tomorrow, Wednesday let's pull up the calendar real quick because I'm seeing something in the charts that's kind of shaping up to my strategy. But I wanted to point out, see how it'll play out. Let's see. So we're gonna go. I'll show you guys what I'm doing here.
Euro odd, or
no, just a dollar.
overall dollar.
So let's see. We are doing this week. So keep in mind, there's going to be a Fed interest rate decision. High predictability that it's going to be. It's going to rise 75 points. With those type of announcements, we could predict high volatility. And the way that Glenn and I, we're technical traders, so we're not really trading off of the news, but let's combine these two together. So this is dollar Swiss. It's a dollar correlated pair. So that means that news may affect this pair. And I'm seeing here on the daily, we're getting to a lower low. This is my daily on the bottom right. So we got a low broken below my EMAs. Then we try to pull back and try to close above. But if we look here at my where my cursor is, it doesn't break below. So that's a lower low already. Followed by, or it's a lower high, excuse me. This is a lower low. That second circle I drew, that's a lower low. Followed by a pullback, and that probably reached halfway, but that's even another low. So now we're kind of seeing this, like it's creating lower lows here. And I mean, to me, this is an ascending channel breakout, ascending channel pullback, breakout on the hour. So we could be seeing some momentum here, some movement plays. I actually may place a trade on this one, but and regardless, if I'm not looking at the news, right, that's what I'm saying is that I'm seeing that this market is in bear territory. It's moving in a bearish type of momentum here. Volume, the only thing one thing that I don't like is the volume is really low on these candlesticks. But again, we got a lot of announcements coming up. So we're just keep an eye on those. Dollar yen may continue on breaking. We have a pullback. It had this strong bearish momentum here, and then a pullback. And I like those moves. This would be a reversal play for me, just because we are in an overall bull trend. But this reversal play, some of my reversal plays have become like one of the best trading for profit return rewards. So that's something to keep in mind. Like, as what I like to do is I'll see, okay, there's a FOMC announcement, but let's see what the market is showing. Is there an opportunity in a technical sense? But man, oh wow, we're 10 minutes over. Sorry, guys.
Sorry, guys.
Shoot, thank you for your time, man. Sorry to go over, but
yeah, no, all good.
Yeah, it was a good one.
Yeah, for sure. I was gonna go pull up another chart, but
do it, man. Do it. If they don't mind, I don't mind.
You guys don't mind. One last one, since we're on the topic of FOMC or any sort of a news announcements. I think I wanted to go back to the last FOMC report.
Ooh.
And just share what the market looks like similarly during these times. And this is an hour, so I wonder if I could zoom in. Let me see. 30-minute. Let me see this. Okay, so real quick. Okay, so I think it was on a Wednesday. Yep, Wednesday. And so price, if you could see starting here where my cursor is at, it's a steady, it's low volume, of course. You see the volume bars, and then of course it starts picking up during the New York Open, and around 8 a.m. Hawaii Standard Time, you see the volume bar down here. It's topped out, but you could see this big, large doji. So the size of it, right, is was it the bottom is 37.22 and the high is 38.20 30. So this is a 100-point move within 1 hour. Okay,
You.
so that kind of gives you an idea on what kind of market conditions you might encounter during these
Definitely.
times, so 100 points within an hour. The previous um range, let's look at this bar, was a low of 43, high of 60, 20 points, right? 20 points, like for this bar, and we got 100 points here, so 5 times the movement. Yes, there's a lots of that means there's opportunity to be had. If you're a day trader slash intraday, you want to take advantage of this kind of move, but be careful, right? Like, you could see price was starting slowly trending up, and then this guy just freaking goes 100 points, takes out a lot of people's stops, I'm pretty sure. Same thing. So I don't know, I don't know if I was in the market at the time, but in a second, the second hour following that announcement, price another volatility, low of 37.81, high of 38.42. So that's about 60 points, you know. And then it continues on after that. Closes the market, the day closes, comes up, and it just comes back down. So it's very tricky. Yes, lots of money, lots of opportunity to be had. If that's your plan, if you're comfortable with it, go for it. Okay. For these kind of announcements, with your trend follower, or bigger term swing trader, then these announcements can either be a catalyst for your profits or a catalyst for your losses. You know, and for my experience, um, it just works out. If you're on the right side of the market, you're gonna want these announcements, because it just, like I said, speeds up the movement, and it could be good for you. So don't be afraid of trading during these times. You can, it's good to have experience there, and really, yeah, you just gotta be there for an opportunity, guys. With that being said, as we wind down the conversation, I hope this was valuable. Hope you guys were able to get some good stuff from this Traders Lab call. Like I said, we're going to be phasing out these free calls. We're going to be only catering it to the current members. As I was mentioning at the beginning of the call, we got something special reading our planning. We're going to be releasing more details very soon for you guys, for showing up, because you guys should be rewarded for showing up. For all the members who's watching the recording, thanks for watching. Y'all have a great night. Have a blessed evening with the loved ones, and trade safe, guys.
Cheers, guys.